Hello and welcome class 12 students. Today I am going to start another accountancy chapter of your syllabus. Last time I have completed the chapter cash flow statement from part B of the accountancy syllabus. Today's chapter is ratio analysis or accounting ratio from that part B section. This chapter is very important and this chapter is very interesting also. First I will explain to you what this ratio is all about. Then slowly I will move on to the classification, showing you each details of the types of ratios, and then we will move to the sums. Now first I'll explain to you the ratio analysis definition or the introduction of ratio analysis. But before starting, I just want to give you a reminder of your examination. Yes, your first unit examination will be held in the month of October. So prepare for that. First unit examination of class 12 accountancy will be held on the month of October. This examination will be based on 4 chapters of accountancy. Yes, 4 chapters of accountancy. That is company accounts, debentures, cash flow statement and ratio analysis. 4 chapters will be included in your examination of first unit, which will be held on October. Now coming back to ratio. What is accounting ratio? A ratio is nothing but a mathematical relationship. It is an expression of mathematical relationship of one value with the other. It is an expression which may be called as an important technique for analyzing and understanding the PL account and balance sheets of different companies, of different organizations. It expresses the relationship between current assets, current liabilities, sales and sundry debtors, then net profit and capital investment. Different types of relationships are there which can be measured, which can be interpreted with the help of this accounting ratio. Now this ratio analysis is a most widely used technique for interpreting and comparing financial reports. It analyzes financial data from the PL and balance sheet of a company. These are used for the assessment of liquidity, profitability, activity and solvency of a firm. So this is what ratio is all about. Ratio means just comparing the two things, comparing the two important aspects of any organization. It is used to evaluate, actually ratio analysis helps to or enables to evaluate the firm's present position, the firm's current position. It provides the indicator of a firm's ability to earn the profit, or we can say it is an indicator which helps in measuring the firm's profitability. It allows comparisons to make or to predict the future. It constructs a simple explanation of a complicated financial statement of an organization. Now this is what ratio analysis is, and today we are going to explain this ratio one by one. Now this, first of all, I just want to tell you that this ratio analysis is very important as far as the examination is concerned. Theories and sums both I will give from this ratio while the examination, in the examination paper. Now this ratio analysis is very important for making any kind of investment decisions. It helps in predicting the future, as well as it also analyzes the current position of a firm. What is the current position of the assets and liabilities of a firm? These type of problems can be answered through the help of ratio analysis. It is an expression of making comparison. So this is what is ratio analysis. Please download the PDF where I will provide the important question answers of ratio analysis. Go through that Do it as a homework so that you can understand this ratio chapter very well. Now coming back to the classification of ratio. Now this ratio can be classified in four distinctive categories. Now what are those categories? I'll explain to you one by one. If we divide ratio into four groups or four categories, there are four kinds of ratios. There are four kinds of ratios. Now number one is very important, liquidity ratio. Liquidity ratio. Number two is solvency ratio. Solvency ratio. Number three is activity ratio. Activity ratio. And number four is profitability ratio. Profitability ratio. So these are the four main categories of ratio. These are the four main types of ratio that we are going to learn. Now the whole ratio chapter is divided into these four categories. Very important, these four categories. Now one by one I will explain each category. Now liquidity ratio. First is liquidity ratio. Now liquidity ratio, under liquidity ratio what will come? Under this liquidity ratio, first thing that will come is current ratio. Current ratio and you can say quick ratio. Quick ratio. Quick ratio can also be called as liquid ratio. Other name of quick ratio is liquid ratio or acid test ratio. So these are the different types of liquidity ratio. Current ratio, quick ratio or liquid ratio. These are the different types of liquidity ratio. Now we move to the next category, that is solvency ratio. Now solvency ratio, under solvency ratio various types of ratios are there. For example, debt equity ratio. Debt equity ratio. Very important. Or proprietary ratio. Or total assets to debt ratio. Total assets to debt ratio. Now the third type, that is activity ratio. Under activity ratio, the first ratio is stock turnover ratio. Stock turnover ratio. Stock turnover ratio. Then we come to debtors turnover ratio. Debtors turnover ratio or creditors turnover ratio. Or working capital turnover ratio. Working capital turnover ratio. Now we come to the last category, that is profitability ratio. Profitability ratio. Under profitability ratio, the first thing which will come is gross profit ratio, or we can call it GP ratio, gross profit ratio, or NP ratio, or net profit ratio. And operating ratio, or operating profit ratio, operating profit ratio. So these are the different types of ratios which will come under the 4 categories which covers up the chapter of ratio analysis. Please go through the classification, because without clearly understanding this classification, you cannot move ahead. You cannot understand the chapter. First, you need to go through these classification. I am providing a PDF of these classification and different theory. Please go through it. Go through the classification so that you can understand the 4 different categories of ratio analysis, which is very important. To understand the chapter of ratio analysis, these are the 4 different categories: liquidity, solvency, activity and profitability. These are the 4 categories. Under these different types of the main types I have written over here. Many more ratios are there which will come under these categories. Many more ratios are there, but whatever I have drawn over here, whatever I have shown you in today's class is the main ratios that are included in your syllabus. The main ratio, the current ratio, quick ratio or liquid ratio, debtors turnover ratio, creditors turnover ratio, what is this proprietary ratio, net profit ratio, gross profit ratio. These are the main ratios which are going to come for the exams, because these are very important for your syllabus. These many more ratios are there, but these are the important one that I have categorized. Please follow the chart. Please follow this tabulation of ratio so that you can understand which ratio comes under which category. Now in the next class I am going to explain to you about each category. I'll start up with each category of sums. First, I will start with this liquidity ratio. In my next class, I am going to explain the first category, that is liquid ratio. Under liquidity, liquidity ratio. Under this, current ratio and quick ratio is there. So my next class will be covering the first category, that is liquidity ratio. So follow the classes to understand the ratio analysis chapter very well. I hope whatever I have introduced to you about ratio in this class, you can understand it very well. Just go through the class, download the PDF so that you can get a clear idea about what ratio analysis is all about. In my next class, I am going to explain the first category of this ratio, the first category of these tabulation, that is liquidity. Liquidity ratio. Now, I hope you can understand the class. Thank you. That's all for today.